Okay, do I have sound, guys? Can someone type yes in the chat if I do? I just muted all of you. So the only way you can communicate with me is to type over there. I see yes, yes, yes. Okay, cool. All right, let me do one other thing here. Really don't understand the thinking behind just a funny aside, the webinar software and the meeting software, both run by Zoom, have a completely different interface for the presenter, which leads me to think they bought one or the other, which probably is what happened. But it's just interesting that software companies don't fix stuff like that right away, says a software company guy. All right, you should also see my main screen, which is just showing the mopping up since the New York session closed. Is that sharing properly as well? Anybody? Yes, it is. Okay, cool. All right, so I'm gonna throw this up for a minute. Can everybody take a moment, please, and read that? If you're just joining us, I'm not talking. I just threw this slide up and I asked everyone to please take a second and read it. And then I'm going to stop and I'm going to take 5 whole minutes and ask if there's anybody that doesn't understand this paragraph. Now, this does not mean that I won't answer questions about my indicators or try to be helpful. But seriously, guys, when you abuse that, I want to just refund your money and walk away. I just can't. There's 50 of you on a dozen different platforms, on 3 different operating systems in 14 different countries. Can anybody help me out here? Seriously, I'm just so stuck on this. It's going to impact my ability to do the next part unless somebody can help me here. I've said this at every workshop, and I'm serious about it. And I'm too polite in chat, and maybe I shouldn't be. Maybe I should just delete the questions that are hours of them a day. If you feel like you're being scolded, I'm sorry, I'm scolding you. This is a waste of everybody's time. We're not here to do this. Does anybody have any comments? I mean, please type them. I'd love to see any feedback whatsoever. Hey, ignore the questions about software. Yeah, I'd love to be able to do that. The problem is there are people that are posting information that is not correct, Stammer. And therefore, if I ignore it, then I haven't been leading you properly because you're getting poor information. Yes, software is a preference and a choice. That is why this is the policy for this workshop. Everybody has different preferences. 3/4 of you are using terms wrong, like orders and liquidity and whatnot. And if you'd stop posting them wrong and arguing with me about what the right definitions are, I'd be really happy to explain to you what the right definitions are. I'm sorry the rest of you have to hear this, but there's been enough people that this has happened with, and just for the record, it's 14 people out of 50 that I've had this interaction with in the last 48 hours. Okay? So that's why I feel the way I do. If you don't understand that, send me an email and I'll refund your money right now. Okay? And I just hate to start on this tone, but it won't let me restart a workshop once I've started it. So maybe I'll edit this part out. But, this is not a business, guys. I'm not, Jeff the Furu on Twitter selling thousands of $50 a month memberships. I'm here to help you. Waste my time and it wastes your time. Waste enough of my time and I'm going to get frustrated and I'm going to just give everybody their money back. Okay? Now, if it's just 1 or 2, I'll deal with that person. But it has become so many of you that I'm doing this, and I hate doing stuff like this. I really do. Okay, that's enough of that. Anybody have any question or comment? This is the end of it right here. Okay. The opening five. Gosh. You know, we're going to talk about 8 setups at this workshop. And if there's any one that's probably the easiest to learn, again, going back to what I just said a minute ago, if you just start, if you get a look up the term tabula rasa if you don't know what it means. It means a blank slate, as in like children are born with a blank slate and then they learn stuff. You guys are coming in with so many preconceived notions, and a lot of them aren't accurate. You know, your definitions about things in your head, and you know, maybe they came from other training elsewhere or whatnot. And that's why I'm spending so much time not talking about definitions and trying to show you reality and how it really works. So given that, it would be really useful if those of you that think you know terms would just say, you know what, I don't know anything and I'm just going to listen. And because this one will confuse you if you don't pay attention to the explanation of it. If you go by what you think I mean and not read what I mean, it will confuse you, at least for a while. And that's typical with this setup, so that I will be patient about. I will not be patient with people that argue with me about whether bookmap shows order flow in the past, present, and future. And the answer is all of the above, just like Jigsaw does and any order flow platform does. Gosh, you know, 5 times over and over. Okay. Contact information if anybody needs it. You should have it by now. If you don't, you should have it. The disclaimer. Again, educational purposes. You know, particularly what we're doing here, this is educational, just from the point of view is, I'm not telling you that the signal is when the XYZ crosses the YZX indicator, which, you know, by the way, if anybody's telling you that ever over and over again, it's just nonsense, because things don't repeat themselves that way. Yeah, in a trend, it might do that every time there's a certain kind of a trend or whatever, but you really have to learn to understand what the information the markets are giving you is. And in this particular case, this is kind of puts the disclaimer right on points. That's why I'm giggling. It truly is educational. These aren't signals for trades, guys. I'm teaching you how to understand the market's auctions so that you can develop your own bubbas and you can find your own trades in addition to executing these actionable setups profitably. That is why we are here. I hope I've made that just absolutely crystal clear. Okay, the agenda for today. We're going to talk about what the Open5 setup is and what it isn't. Again, lots of confusion. The vast majority of the time people get confused about this setup, it's because they don't listen or read the points. They take the first thing I said and they get married to that. And again, these are art, guys. There are no, okay, the setup happens if XYZ happens and it confirms if item 3 happens. No, it's not like that. This is an art form of finding places where participants are active and where they're not, and being able to capitalize that. That is in fact your edge. The Open5 is a wonderful one because of its characteristics. What are they? We're going to talk about that. And why do we care? Well, one of the reasons we care is that Open5 is the opening 5 minutes every day. So, you know, somebody asked me on Facebook, and I didn't mean to jump on them laughing, but, you know, is there an Open5 setup today? Yes, by definition, it's the opening 5-minute range. Now, that doesn't mean that's the only way you trade it. So we'll get into a lot of detail about what it is and what it is not, and why it's important and why we care. This is about theory today. I am not going to show you anything live, and we're just going to see some chart examples, and most of them I've posted. This is the one setup that you don't even need order flow to really do this. You could do this with just a traditional platform. Order flow just makes you better at getting it right. Quicker, maybe, is a better way to put that. And at the same time, this is also one of the easier ones to learn with order flow, because it lends itself to something like footprints or even 5-minute bars. As you've seen, I use 5-minute candles. I don't even use footprints. On the Ninja 8 version, I have that as footprints, but you don't need it. And I'll show you all that and explain it. No live examples in this lecture. That's why it's a lecture. Okay, this is a slide from the presentation we did about the introduction. And notice how I've bright red set up. If you look at this paragraph and you say to yourself, okay, I want to be successful, what does it take? Well, you need a playbook. What are constituents, components of a playbook? Setups, Boom, that's why we're doing that. Execution is about you. Execution is emotional management, account management, risk management. Feedback is about your journaling and your coaching and your mentors and how honest you are with yourself. So really, if you're new, and so many of you have said to me, God, if I could just get one actionable setup a day that I knew and could trade well, you know, I could build my retirement account like John, or I could do this for a living like 3 or 4 others of you, Blair and Maria. And that's true, that's real. So that's why we started with this one. Okay, so stay focused on that. Don't get distracted by all the other nonsense. Seriously. Okay, this is also a duplicate from the intro slide because I want to reinforce why I made those points. What makes a good setup? It's consistent, which means it behaves similarly every time it happens. And this one does. And it shows up every day, so that's consistent. Repeats frequently, right? The risk and the reward are clear. This one, again, because there's a lot of ways to play it, that's true, but it's not as true as some other setups. What is true here is that you can manage risk well. Sometimes figuring out where reward is in the Open5 can be harder because on a trend day, the Open5 becomes an opening drive, which is another type of setup that I'm really not going to go into, but most of you are at least have heard of it. That's when, you know, we open and just gap up and then just a strong move just keeps going through the first hour and generally doesn't look back. You know, it sometimes peters out, sometimes rolls over later. So, you know, oftentimes an Open5 becomes an opening drive like that. So determining where you want to get out is sometimes harder, but determining where you want to get out if you're losing is easy. So reward, sometimes hard to find. Is this one a low win rate, high reward? Yeah, it is. Generally, you don't play this over and over all day. You know, the most it might occur on a typical day might be 4 or 5 times. And not all of those occur in the opening 5 minutes. That's what we're going to talk about. As far as my mode, you know, if you remember on my setups, jump out of here for a second and let me just throw this back up here because easier to do that than have you guys think about what's he saying there. So let's just go here and okay, the modes. I'm talking about this here, and I have the Open5 as a scalp, and I've gone back and forth. I used to have it down here in the kind of weight and scalp or scale, and the reason I don't anymore is because of what I'm about to explain to you. But I want you to understand, if you're kind of wondering about that, particularly given what I said about the opening 5 maybe becoming an opening drive and going into a trend day, that's not that uncommon, in which case this doesn't make a lot of sense. So that's why I'm saying that. Let me go back to the PowerPoint for a second. Okay, so let's just jump. So that's why I'm mentioning mode at the bottom of this slide right here. Just to keep you focused that, you know, depending on how you trade it, your mode might be different. You might not even have mode. You might just do, you know, weight trades, or you might just scalp. But, you know, it's important to understand that so that I don't sound like I'm contradicting myself. Does everyone understand that before we actually get into what the Open5 is? Anything in the introduction, anything about this, anything about back here on the any of this stuff here? Make sense? Okay. Don't feel bashful about asking questions just because I was biting everyone's head off at the beginning. Feel free to ask questions. Just don't ask me if Bookmap does this. Okay. The opening 5 setup is a setup that jumps on imbalances. Now, by the way, this is a training technique that I learned back when I was an IBM field sales engineer and rep and sales manager and trainer and whatnot. I'm highlighting keywords for you. So if this was on a website, think of it as like a, you know, one of those clouds of terms, okay? Those are the words you should be paying attention to here, and we'll go through it in some detail, but we're looking at imbalances in the first 2 to 5 minutes. Will I ever play it in the first 15 seconds? Sure. So I'm not saying that I'm only going to play it in 2 to 5 minutes. I'll play it all day. But until I get 2 to 5 minutes of data, it's a little more speculative and it's a little more just pure tape reading. Okay, and then we are talking about the opening 5 minute range, okay? Invariably at the end of this session, someone's gonna ask me how we can do a 5 minute opening setup at an hour before the close. And that's just going to happen. But it is not just the opening 5 minutes. It's that range dragged out over the whole day. And that is why I show you guys this chart. My opening 5 is pink, and my opening hour is blue. And when they're the same, it will default to the blue. So that's the top for today of the opening 5. This is the bottom of it in ES. And you can see in NQ it's a little clearer because the first hour high was just over the opening 5. And then you can see the low down here. So those are two good examples of what it looks like. And of course, someone's going to ask me, how do you draw that on your chart? There are 3,000 indicators on the web that will do that. Help yourself. No, don't ask me which ones I like or anything like that. Hope I'm clear on that concept. It's real easy to do. You can even do it with like colored bands. It's like initial balance, but the first 5 minutes instead. That is not what it's like to hear. That is exactly what it is. That is perfect. It is another form of opening balance. Now, those of you that have studied Stettlemyer and auction market theory in depth, I mean beyond just markets and profile and books like that, but really understand the math and the science behind the TPOs and how the entire structure works, you'll understand that there's certain times of the day that are very important. That's why some people use TPO charts. I don't, but that doesn't mean I don't think that way. And so what I'm doing is, yes, I'm simply defining two different opening balances. The first one is my opening 5, and the other is the opening 60 minutes, which is what people typically refer to as the opening balance or the initial balance in auction market theory. Now, having said that, there are markets that I do this with, or that I used to do this with a 30-minute or a 15-minute and an hour, and not a 5. And this is, the answer to this is going to be, there's a lot of ways to utilize this kind of idea. I found that the opening 5 standardized across all the instruments that I traded the best. Even ones that open like a half hour earlier on the old pit open of oil. It still does a really good job of producing an opening 5 on this time frame, even though technically oil opened a half an hour earlier. So, you know, understand all that within the framework of this statement here. You know, many of you want to really rigidly define things, and you want terms to mean really exact things. And guess what? It doesn't work that way. There are certain terms that are fairly consistent in the market, but here's one that everybody, get 100 traders in the room, you'll get 150 opinions. Seriously, the term liquidity, what does that mean? You know, some people will tell you, well, it's how thin or thick the market is. Other people will tell you it's how quickly it's moving through that based on the order flow momentum. You get my point here, guys. It's, you really have to divorce the terms and understand the concepts of them, which is what the argument about Bookmap was all about. You know, orders versus trades versus, you know, just stick with the language you're using in the workshop. And if you have other language that you have outside, great. You know, just simplify it and try not to get married to terminology. But you have on oil the same settings as I do in ES. Exactly. That's exactly right, David. My point that I was saying there was exactly that. I've tested this using the opening 5 minutes of oil session, which is actually a half an hour earlier. And after testing that for about 2 years, and that's not back testing, that's live testing, I realized what this is right here. You'll see this almost every day. Unless we're coming in or out of a sharp move, that half an hour will consolidate, and then the real move will start once New York opens. So for that reason, I standardized it. Again, I don't care when the pit used to open. I used to trade in the pit when it opened, but I don't do that anymore. So now I'm looking for where is my edge, not what are the rules. Okay, did that answer your question, David? Or did you understand why that's the way it is? Okay, see, this is something a lot of you are going to experience, that you might have used it on the oil opening 5 minutes, and it worked great, is what David just said. And I'm going to repeat what I said, which is I've done that too. One of the things you will learn to do when you become a more sophisticated, experienced trader is you will test things like that against each other. And that's what I'm saying I have done. And I find that I'm not saying it doesn't work. I'm saying that there is no significant difference between using it at the opening of the New York Exchange and using it at the opening of what used to be the pit in oil. David and everyone else, do you understand the distinction between the two things we are saying here? Okay, good. Why am I harping on this and why is it important? Because it's not the time on the clock that matters. It's not whether we're using 6 o'clock or 6:30. It's what is a testable hypothesis, not back testing. Testable using live data on a forward basis, trading it in a good sim or with real money and seeing if it works. David says it works, great. Now I'd say to David, cool, you want to become a world-class pro in oil? Put them both on your charts and see which one gives you a better edge. I would submit to you, you'll find that the 630 to 635 one does too, because it did for me. Now, if you came back to me and said, well, you know, I tested that on my trades 2,000 times in the last 3 years, and I'm finding, you know what's better than that? 7 minutes. That's the kind of stuff I want you guys to be thinking about, okay? Optimize it for your circumstances, your platform, your style, but understand what we're talking about here. We're not talking about an argument over which is better. We're talking about, we're looking at the same thing. The skill as a professional trader is how you use that data, how it becomes your Bubba. That's how you build a Bubba, Amy. You learn how to question your own assumptions. Okay, we are not doing the Open5 explanation yet, Dr. Shaw. Yes, slowing down is something I will try to do. I get energetic on these things. On the other hand, remember, we have traders with 50 different levels of experience here, and some of the things that you're hearing for the first time, like delta and things like that. So this is market profile theory, and some of the questions that are coming up in your head are perhaps because you haven't studied that in depth yet, and that's going to apply to a lot of other people here too. I will try to take it a little slower. Now, moving forward. So what is this based on? Again, this is just a paragraph. I'm going to put up a chart. We're going to talk about it. Just, again, trying to get you guys to understand key points. How to learn trading. Many of you don't respect the level of knowledge it takes to do this well. You think, you know, I've been trading for 9 months or 11 months or 18 months. I should be able to do this. And I would, again, you know, compare this with medicine. You know, we're in school for 12 years and then you're an intern or a student for another 8 years. And then maybe you're starting a specialty and you're 40 years old. Okay, this is not dissimilar, but if you really focus on the points that are important, you can crush that down to a couple of years. But again, it really takes applying yourself. It's really not something you can pick up overnight. And you really have to constantly have your head in, how can I learn this mode? Okay, so overnight volume levels, high volume nodes, low volume nodes, I'll talk about that in a minute. That's one of the things that you do when you play this trade. Head fakes, it frequently head fakes, which means it will start to go one way or the other strong and then boom, go back the other direction. There's reasons why it does that. Okay, Amy, thank you. So here's the concept right here, this middle sentence. Large institutions can't trade overnight. You know, if you're a 1,000-lot trader, there's just not enough, there's that word liquidity. There's not enough volume out there to absorb you, is what that means. So a lot of times those guys will do things based on what happened since the previous close, and they will do it right on the open. Now think about this for a minute. If you're a 1,000-lot trader or a 500-lot trader, you're Goldman Sachs or whoever it is, and you decide, you know what, I don't like this market at 30.36. Let's say that's where we open tomorrow. And so you're just going to liquidate 1,000 lot. That's the kind of things that happen right at the open, so they can really influence the price. So what happens is those imbalances go through the process of pricing. And so the way to play this is multifold. Number one, for any of the trades that occur at the beginning of this, in other words, while you're in that opening 5 minutes and not later in the day, you want to purely use market orders going in and out. It just moves too fast. For example, you may call that large order that came in at the beginning right and be with it and making money, and then all of a sudden that guy's done selling and people come in and buy and it reverses on you like lightning. And I know all of you have experienced this. So that's what's happening, and that's why the opens are so wild. So lastly, always go with the order flow, never fade open fives. I will explain that more in a minute. Fading means going the opposite of a direction. So if order flow is strong, you would be, catching knives or trying to call tops. Never do that with this trade, ever, because you will get on the wrong side of it so fast that it will either wipe out your account or you'll be a deer in your headlights. Last, those types of fading setups might come later in the day, and we saw that today even. There was a post in the Facebook group from, let's see, it was Trader PD, I think, that had done an Open5 NQ fade, and I posted a couple of them too. That trade worked a lot today. It works a lot of times when we have this kind of movement. Okay, so again, guys, many of you are educated and trained and experienced in other things. You're doctors or lawyers or programmers or real estate professionals or whatever it is, or teachers or whatever. I'm trying to give you a framework to learn this stuff that I know works. So trust me here for a minute. Look at the red words, okay? Imbalances, 2 to 5 minutes, range, overnight volume, high volume nodes, low volume nodes, head fakes, market order, with the order flow, fades later in the day. That's all you gotta know, okay? Don't get buried in the rest of the detail here. And then when we go look at charts, it will make more sense. Okay, so does anybody have any questions on any of the red items before I pop out to some of the charts I saved in Slack? I'll go ahead and close this while I'm waiting to see if there are any. Still go ahead and post them if you have them. Okay, so I'm on the Slack Setups Open5 channel. If you haven't joined it, go do so. Everybody can join every channel. There are no restrictions. Some of you can't do certain things in certain channels. Like I'm the only one that can post in the schedule, but anyway, so make sure you're here because I'm going to use examples here. That's why I stuck them here. I will also try to show some other ones as time goes on. Remember, we have a follow-up to this session Monday, and we're actually going to trade this. So if you look at the calendar, it is always there. We are doing this one right now, and then prepping for the Open5 is November 4th at 6 a.m. Yes, they are always recorded. Okay, so back to here. Any questions before I go forward? Is everyone still hearing me okay? We're awful quiet. Is that because I scolded you? Yes, you can hear. Yes, and yes, okay. Oh, good. All right, so let's start. I'm not going to do these in order just because this was a particularly juicy one today. So let's see there. I've got a slider down here. How is that for size? Is that a good size for everybody? I could, we're kind of be concentrating on these areas. So I want you to be able to see in there okay on both. I can see, okay, cool. All right, so let's start over here. Thank you, Kevin. Let's start over here with the NQ. And remember, I defined the Open5 as this range between here and here, which is the opening 5 minutes of the regular session in New York. Now, if you go look at, for example, the 30-second chart, just for fun here for a second, it's on there too, but, it gets lost pretty quickly on that chart. On the other hand, looking back, it does. But if you look at this real time, when we were actually forming it, you can see it's a lot more informative than this one is. So, that 5-minute bar there in 30 seconds is 10 bars, and we can see a lot more behavior. And so that's why that chart exists in addition to the 5-minute chart. And it's also why the tick chart, is up at the very top, and that's this one. I'm not going to show you where it happened on this one, but it's just even clearer than it is over here. Trust me on that. You can scroll back and look at your own leisure on your platform. So what are we trying to see in this little interval here? Let's just talk about the NQ to start with. All right, so if we look over here and we see, well, we opened after kind of going sideways for quite a while. Most of the overnight session was, most of the volume was right in there. This is the overnight session here. So kind of uneventful, pretty tight range. What do we got? 140 up there. The bottom was down here, 70 point range, right? Okay, so then we open, and you can see that even though we started to go down, somebody was on the buy side as that happened, and it wasn't a crushing amount of volume, a 10K swing in the NQ. And if you say, well, what's high, what's low? This is one of those things where you just kind of learn over time because it varies by the time of the year and the day. But, you know, when I see a 10K drop over, you know, what is this, 1, 2, 3, 4, 5 bars of 30 seconds, that's not a huge amount of volume. You know, we did a couple 100,000 of these today, so, you know, that is not overwhelming. Now, if I look at it in a perspective 5 minutes, once it finished the first hour, it's a whole different story. So that's why this kind of comparing action, activity, and time is an important skill to learn. So what happened here? It established the 5-minute low, and this was the first trade of the day in the opening 5. And if you were just watching a 5-minute bar, you didn't even see it because it was just this long tail. But basically, we came down there, we hit a high volume node from the overnight. So that's what I'm talking about on that slide in the big bright red there, where it says overnight volume levels, HVNs, high volume nodes. I'm primarily looking more at high volume than low volume because low volume overnight doesn't really mean much. So this is a point that it respected because of the volume, maybe, who knows, maybe somebody opened and sold, but the net of it was we closed out the other end with a really sharp reversal, and that was probably really effective at sucking in some longs. I wasn't paying attention to that particular thing at the moment, but I'll have to go back and look. I bet that did suck in a lot of long traders. And what happened to them? Well, there was a little more chop in here. But once the range is established as a high and a low, so that's where we first bounced off of it. And then you can see if we go in here, we established the high, and then the sellers came back in. And they came back in big. This is why we're looking at this. Not only was it almost overwhelmingly on the sell side, but it was a lot of volume compared to this moving up was not on a lot of volume. I mean, this one section took out all of that. I mean, it literally is twice all of that. And again, this was a clue here. Remember I said this is not a particularly large amount of volume? Well, it kind of did a high bounce, but didn't take that number out. Then it came close again. It made a higher high, but nobody got interested. We had another node to bounce off of going this way. You know, those are places where there are a lot of people interested. So if somebody sold up there in the past, they might be looking to add to their short. And then, of course, what happened? Well, we pushed down and we did it pretty hard. So every 5-minute bar after that, you know, one of them came back up and tested that level. Then the next one did, and it just got sold right back down to a level that held a lot during the day. So, you know, we can kind of see where people were real anxious to sell, and then where other people came in to sell because this level was going. And then when we got back up there again, it got sold again. But this time the selling wasn't quite as aggressive, 121K versus 47K. So that's why we have those swing volumes, and that's how we're reading them. Let's see, let me stop there for a second. There's a whole lot of other stuff going on this chart. Just for the record, for traders that are familiar with Wyckoff, this is a Wyckoff spring right here on the 5-minute, right off of the first hour low. And just because I'm staring at it, I want to remind you of that. This is a Wyckoff up thrust, which is a failure of a move up. This is 3 Wyckoff up thrusts. This is an up thrust that broke out and then reversed and failed and created another one. So those of you that are Wyckofians and that are interested when we get to springs and up thrusts, I will be happy to elaborate. But that's something that I mean when I say that, you know, frequently setups are both things or more than one setup. You know, there's also a ledge down here. We'll get to that later. So let me stop for 1 second and just say, okay, if I were a relatively new trader and I was listening to Jeff's Open5 lecture, I'm Dr. Shaw right now, and I'm listening to this lecture. I'm like, okay, so how can I use this? That's easy. Just step back a bit. And the answer is going to come in any of the other examples. Like here's just one from NQ. What was this day? This is a ways back. This was August 5th, and I had posted this in the Top Step group, but you can see I changed colors since then. They used to be gray and I couldn't see them. So this is the same Open5 pink lines on the current charts. And you can see literally every time it got up there or anywhere near there, it was a good reshort on this particular day. And, you know, this was a 90-second NQ interval, which, you know, on days that are going sideways, sometimes you can take a step back and see that fairly easily. That's one example. Oh, I don't know. How about a few more? No, let's not do that yet. We'll come back to that. Okay, that's what we were just looking at. Okay, here's a butte from, wait a minute, that's today again, I'm sorry. That's just got cross-posted in a few places. Okay, let's see. Okay, this is one of the 30-second responses that I took a snip up because it was a really good example of how you can play this with just a 30-second chart without a dome and without order flow other than what's on this panel. I would suggest a dome, and that's a better place, but this was a good example of how you can trade this, you know, in kind of the once or twice a day mentality. This was the low here, and you can see how, you know, just by putting 30-second bars up, you could see where the low risk entries were. They were just, you know, just below it or just above it with a tight stop. And then you just kind of had to let the trade work. And when it stopped working, you know, get out or add to it again. And, you know, it ultimately paid off quite handsomely. And it never really would have gone against you as long as you respected that, you know, give or take a tiny bit just for the auction to happen. So anyway, let's do one more and then I'll stop for, let's see. Okay, here's another good one. This was the 9th of August. And let me make that just a little bigger. You can see this is one of those trend down days that that we had, you know, real good correlation between the NQ and the ES. And so they both opened up with similar patterns after overnight sessions that were really uneventful and really balanced, you know, literally just doom, 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 you know, all overnight. And then, you know, as we got into the open, you know, you'll see this a lot. We'll talk more about this later, but they'll ramp up a little bit on these kind of setups. And then boom, you know, they kind of committed all the little guys and then they just sold right into that. And, you know, every chance they got, they sold into it. And gosh, you know, what was this? This was, even if you waited for the retest here at, what was that, 27-ish, you know, you had 17 points on the ES. For those of you that don't do the math quickly, it's $50 a contract per point. So 50 times 17 on a one lot if you just did that and nothing else. So this is the setup that you should pay attention to. If your mission in life is to have one good setup out of the workshop and then work from there and, you know, maybe take the advanced workshop if we ever do it, if I don't kill myself first. All right, I'm going to pause for a minute. Yes, I'm kidding. Okay. I get frustrated and angry and then I blow off steam and then that's that unless somebody does it again. Don't be that guy. All right, what questions do we have about the Open5 setup? Let's go back to that slide and see if we kind of covered all of the terms that I highlighted. Okay, so imbalances. Yes, those are when there's a lot more buyers than sellers. Yes, it's a lot more sophisticated than that. Yes, if you're using footprint charts, you can get into the bar by bar imbalances. No, I don't recommend you do that. I recommend you just do it the way I just showed you and look for places where overwhelmingly and asymmetrically one side or the other is in control. I'm going to pause on that statement. Does everybody understand that statement? Look for the areas that overwhelmingly one side or the other is in control and look for areas where that occurs asymmetric for risk and reward. A really good spot's right here. Why? Well, there was a lot of volume there. So if it leaves that area, well, hell, the odds were it was going to at least go through that thin area and come back down to the thick area down here. You know, that was formed already by the time, you know, it wasn't quite as big, but it looked something like this at that point. So you could see, you know, a thin spot to fall back through and then a high volume node after the ledge broke down. So, okay, again, I'm pausing to see if anybody is understanding that statement and no one has responded. Is that the overnight point of control? I have no idea. I don't label point of controls on my volume profiles. I only have them on my dome, and I pay very little attention to it other than it's the point of control. You know, for example, on the ES here, it's that pink spot right there, and on NQ, it's down here. That's simply the point where the volume was the largest. Here's the problem with getting too married to points of control or naked points of control. There's a ton of guys selling strategies around that on Twitter. What's the difference between 32,000 trading here and 26,000 or 29,000 here? Or how about 32,454 here? It was only 400 less, and yet the price is 2 full points away. So, and what about this one at 30,000 and this one next to it? If I add those together, I got 60,000. So 25.75 and 26 are a whole lot more important than 29. Am I making my point? Okay. And I'm not trying to pick on you. That's a really good question, and it's why I say that points of control are, you know, they don't fall into the nonsense category, but they fall into the, don't just think that they mean anything other than what they are, which is the place where the most volume was. Sometimes, you know, in something like NQ, there can be 40 places within 10 or 20, you know, volume points of each other. So right now, let's see, 35.33, 34.86. You know, down here, there's some 29s and 22s, and up here, let's see, some 23s and 25s and 21s. So I would submit to all of you that that isn't significant enough difference to even consider it. Remember, what I do well, besides screaming and yelling about bookmap conversations, what I do really well is I take ideas and patterns that I see regularly, and I game them into setups that are actionable to make money with. That's what I'm really good at. And just for fun, I'll show you a bit of how I do that, okay? So this is my master process. And I've told you guys before, you know, this is 46 years of work. It is. And there's all kinds of other crap underneath this that I use, and that looks totally different than anything you've heard from me. And that's how I arrived. Look, see all these, you know, these choose yes or no's. These are all things where I was literally checking every component of everything on here. And that's how I ended up back at this. And that's how I ended up with this configuration, these setups, and the conditions I run them under. And so if I say that something hasn't turned out to create edge or hasn't shown any sort of advantage, I'm not saying that lightly. It's stuff that I've really investigated. So to make all of you good students with other instructors and with me, here's what I'd like you to do. You know, if you're in any other groups or whatnot, when someone says, well, there's a naked POC there, you know, I see that on Twitter all the time. Say, well, you know, could you please explain the exact mathematical edge that the naked POC is giving you as a trader? How are you using that? Ask them that question. I will be stunned if you got a straight answer. You know, they'll want you to pay for it, or they'll sell you an indicator, or they'll say you're not paying attention. You know, that's the kind of responses you'll probably get. Okay, so all the other terms here should be pretty clear. Head fake, you know, we just saw a bunch of examples of head fakes in the opening 5. You know, here's one right here, you know, opened up, turned down. I showed you that on that 1 minute reversal candle, opened down, turned up, and then turned down again. I use market orders when I do this setup simply because of what I showed you on the 30-second. You know, this thing can really scream. You know, if one 30-second bar can go from 96 to 110, don't be sitting there putting limit orders on the bid or the ask. Just get in the market. If you lose a tick or two, that's fine, okay? You know, and that takes practice. I'm not saying you're going to be able to do it, you know, immediately. Okay, that is the vast majority of the theory. So I'm going to go back and review, and then I'm going to take any questions you have on the theory. Again, we can skip that. Okay, so what is the opening 5 setup? I hope I defined that well, but again, in the questions and answers, I'll give you 10 or 15 minutes to ask me whatever you want without fear of getting chewed up. Why we care, this is the most actionable, repeatable setup because it literally occurs every day. You don't really need order flow software, particularly the Dome, to trade it. You could trade this with charts. if you really listen to how you do it, and really pay attention to the ebb and the flow on a fast tick chart. This is completely actionable. I showed you a few examples. There's a lot more out there. If you look in the Facebook group, the Surfing the Markets group, there's probably 50 examples posted there by me and other people. No live examples. We will do those Monday. Remember to register for Monday. Okay, so let's go back here and I will take questions. Steve Weber, do you have many stop outs or reverses when trading this? No. Okay, I hope you guys understand this answer. On the days that I'm doing it right, no. On the days that it's taking me a couple of minutes to understand that I may have started on the wrong side, yes. Did that make sense, Steve? The more experience you have, the less that will happen. That's like one of the most hopeful or helpful things I can ever tell you guys is what I'm telling Steve right now. There's light at the end of the tunnel on the stuff you're experiencing directly right this moment. But you have to understand that, maybe you were trading too much size. Remember, I'm doing this in the equivalent of $150,000 quote unquote combine, with up to 20 lots. So if I go in with a one lot, and get burned with 6 ticks, it's not the end of the world to me. It's the days that I really screw up are the days that I go in, with 4s and 8s and 16s and I'm on the wrong side of the tape. And it happens. Happened a month ago. I dropped like $3 grand on the opening and walked away for 8 hours. Next morning I came in and I cleaned up. But, I'm not always able to do that. You have to learn your own, chi, your own ebb and flow. Hope that makes sense, Steve. David, when you catch a good trade, is your only exit the order book or is it the complete context? Phenomenally good question. Depends. In the Open5, in the first 5 minutes, I tend to use market orders and bail using my 3 rules. Who could please type in the chat my 3 rules? I've posted them throughout our workshop. I'll give you a hint. The first one is always take profits. They're not in any order, by the way. You can do them in any order. Anybody remember the other 2? Don't lose money. Exactly. That's number 2. What's the third one? Not a rule. But I do say that, Maria. Okay, my 3 rules. 1. No. Okay. 1. Do not lose money. 2. I'm typing it. Okay, why isn't that going? Thank you. Someone did it right before I posted it. That is correct. That is them. Do not lose money. Take profits in your trades. You will not go broke taking profits. You will go broke sitting in trades, trying to make sure you let them work or let them run, which is why it's a good habit to get into good trades work right away. Now, within certain setups, you scale in or out, and it's different. But in the opening 5 minutes, at the beginning, you want to be in or out. Later in the day, for example, the one here that we were talking about, that would be a really good one to scale into. You could go in with 1 or 2 at the beginning without a lot of risk and then see if it develops and add to it on the way down or if it bounces at all on the way down. Okay, does everyone understand that? Okay, let's see. Question on execution from Eric. Your examples show short entries on approach back to the bottom. Would you also consider entering, I'm not sure what you mean by F.X. Are you talking about the Forex markets? After, for example, okay, after initial drop of inversion. Oh, yeah, now this is completely a long trade as much as it is a short trade. Absolutely. I thought I put some of those in here, but I'm not sure now. If I did, I don't see them, but there should be at least one example in here that showed some longs off of it. If not, I will grab them. There was one that had a bunch of typing. Oh yeah, okay. This was an example of how not to get chewed up in the range. This is also in the channel. And as far as an Open5 long, I'll show you, by the way, how to find these things in the group, because I'm going to go look for it. I know there's examples of this. Just do this, and okay, there's an Open5 long reversal that somebody else posted right there. Phoenix posted that. Here's an opening 5 long setup. Okay, there's one right there. That answer your question, Eric? Okay, well, I'm waiting for Eric to answer me. Yes, for example, how you execute it. Okay, I will answer that right now. Let me just, while I'm sitting here, I try to multitask, and since that was a good example, let's chuck it in here too. Feel free to throw, more of them in here, guys. That's why you all have privileges to do stuff. And if you're not in the Facebook group, you should definitely join it, because there's lots of stuff like that there. Okay, so your question was, how would you trade that? How would you execute it? Well, it's kind of depends on what particular day we're talking about. Exact execution is going to be a little bit different, but let's just say, this was an opening 5 long, obviously, that became an opening drive. So this is a really strong trend day. These are really rare, 15% of the time. But the trick here is most of the time a good trader, an experienced trader, would have seen, even in the first 5 minutes, I can't scroll back here, but they would have seen, even in the very, very first bar, that selling just overwhelmingly got bought. So the entry here would have been anywhere in this yellow circle. And if you go back and look here, you even could have preempted it just by the strength of this move. And oh wait, I'm sorry, that's off the first hour high. That's a different spot. I can't enlarge this chart, so it's a bad place. It's a bad example to show you. But the concept is the same as it is going down. You're looking to enter with the lowest risk that it's not going to continue to respect that spot. So just reverse it for long. But if I saw this kind of an open here, wait a minute, let me give you the 30-second view on that. If I saw this kind of an open on the NQ, there's two things I do. I probably would have bought that long because it was a real obvious entry. We saw that earlier. And up here, I might not have jumped in short right away there. I might have let it fill this in because it looked like it was going to do it anyway, and then it chopped around. But I certainly would have been starting to consider it here, when the trend had kind of caught up and the momentum had caught up. And, by that point, if I kind of go back to it and just look at the pattern of the delta bars, other than right up here, nobody's really been interested in buying, and the selling certainly has some strength. And the volume is not increasing, so, nobody's really committing. And then, if you just kind of watch bar by bar on these 30-second bars, that's a pretty low risk entry pretty much any time after that. I'd consolidate it again. That's a good place to start taking a pass at profits, and then it gives you another entry, and then it just blasts down. So, am I answering your question? Just turn that around and do the same thing on, on this one up here for a long. It works exactly the same. Okay. Other questions? David's asking, would you say when it may be a leg before the open goes in this way? I'm not sure what you're asking, but let me clarify. I don't take opening 5 trades until we open, simply because of the premise of the entire concept of the trade is that large institutions are going to come in when the liquidity opens up. Do I want to already have a position on that I think something's going to happen and predict the future of the open? No, I think that's a really bad idea. Yeah, I do know people that sometimes, fade right before the open. I used to do that with a setup I had called the 2 and 2. And I do it sometimes, but I don't recommend it for new traders. I really don't. Anything that says to stay out of it, yeah, it's not working. This trade is so easy, it works or it doesn't, Kevin. You know, you don't need to look for confirmation. You don't need to look for technical signals. You know, if the viewpoint that you're looking at says the opening 5 has been sold, which is what you could reasonably infer here, and that this was a high volume node overnight. It's also a ledge potentially. It's also a high volume edge. So if you're staring at that right there, okay, it's a real easy decision to say that's a low risk short. The lottery trader, the guy who's a trend follower, the person using moving averages in the MACD, he's going to be a long buyer here, and that's why he's going to get hosed, because he doesn't understand the concept of the auction market. He thinks that this is the beginning of a total reversal for the day and we're going to go back up to new highs, because that's what those guys always think. And that's the problem with trying to catch intraday trends, is you get biased. You're long from here, you're happy as a clam up here, you're probably adding to your long. Oh, you could not be more wrong. You're ignoring this behavior, you're ignoring this behavior, you're ignoring this behavior. You're married to this behavior. Does everybody understand this? This is like probably one of the most important 3 minutes I've ever verbalized for you, what I just said about that. Do you guys get that? That's really critical. You know, listen to the recording and play that back. Look at the timestamp. It's 2 o'clock here. I got to wrap this up. This has been an hour. Okay, I'm not going to take any more questions. Please try to respect my time in Slack, guys. And please listen to this recording. If there's questions about it, post them in questions for Doc. That is where all questions should be. The channel that is called Anything Goes is going to be just that, and I'm going to leave it. You guys talk about whatever you want, but I will not respond if I do that to questions, and I think it's your loss. So, you know, you guys can manage that any way you want. Okay. With that, this meeting is over.